Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Thursday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So today I wanted to talk about Rocket Mortgage's recent acquisition of Mr. Cooper. I shot a video after Rocket acquired Redfin, which I think a lot of people know Redfin by name, and not a lot outside of the industry are familiar with Mr. Cooper unless they service your loan. So I wanted to explain the significance of Mr. Cooper. First of all, why Rocket is willing to pay over 5 times the amount that they're paying to buy Redfin, and 2 things that I think this move signals. So first of all, to understand Mr. Cooper, you have to understand the difference between mortgage originating and mortgage servicing. So originating is the process of getting a loan originally. And you can either go directly to the lender that provides the funds. So like a bank, they use their own funds to do the loan, or you can go through the broker channel where you work with a broker like me, and based on your profile, I'll pick between one of, for us, 150 different wholesale lenders, and the one that provides the best pricing and makes the most sense for your situation will be the one that ultimately provides the funds. So Rocket Mortgage has both a retail side and a wholesale division. Mr. Cooper only operates on the wholesale division. So there are no loan officers out there looking for buyers, looking to meet realtors to get loans. They just have a wholesale division where they work with brokers like me. The more important thing about Mr. Cooper, though, is that they have the servicing rights, who you make your payments to each month on your mortgage, who sends you your tax documents at the end of the year, who pays your insurance and your taxes if that's escrowed into your monthly payment. So Mr. Cooper, in addition to the loans that they do themselves through brokers, they will also buy a lot of loans from other companies, including one significant one that I'll talk about in a second, to where they have 10 million different customers that they are servicing right now, with $2.1 trillion in loans that they are servicing. So that's really what Rocket Mortgage is buying, is the rights to those 10 million customers and that $2.1 trillion portfolio of loans. Now, why would Rocket make this move? I think there are 2 big reasons. Number one, they are trying to reclaim the top spot as the #1 lender in the United States as far as loan origination. They were surpassed by United Wholesale Mortgage, which, like Mr. Cooper, only operates through the broker channel. And Rocket Mortgage, as a lender that does retail and wholesale, they and United Wholesale Mortgage don't get along. And I could shoot a much longer video on the history between them, but ultimately it's 2 of the biggest companies in the space that don't like each other, and Rocket is really trying to take back that #1 spot. Now, I mentioned earlier, Mr. Cooper acquires the servicing rights to loans that were originated and funded by other companies. United Wholesale Mortgage is one of the biggest companies sending their loans to Mr. Cooper a lot of the time. So what this essentially is, it's like if the New York Yankees were losing for a couple years to the Boston Red Sox and they go out and buy the rights to the Red Sox single A farm club or something. Rocket Mortgage is going to actively try to get these clients that had been with United Wholesale Mortgage to refinance with them. Now that they have Redfin, they're going to likely try to get them to, if they sell their home, do it with Redfin. If they go to buy a new home, do it with Redfin. They're going to be offering a lot of incentives for that. And in response to this move, United Wholesale Mortgage has stated that they will no longer send any loans after they've refunded to Mr. Cooper, and anyone that they have already sent to Mr. Cooper, they will refinance that loan essentially at a loss. And then the other big thing this move signals to me is that Rocket Mortgage is really banking on there being a refi boom in the next few years. The likelihood that rates go down, they seem to think, is very high, because no matter how good you are at courting servicing clients, which, let me tell you, having several mortgages, there's a couple companies that wind up getting the mortgage servicing rights eventually. And the commonality between them is they will aggressively try to get you to refinance. I'm sure Rocket will do the same. But no matter what, if you have like a 5% interest rate and the market interest rate is 6 or 7%, you're not going to be able to win that client over. So Rocket has to be banking on the fact that mortgage rates should go down in the next few years in order for them to make this move, which, by the way, is not, just play money they have sitting around. It was reported they took out a $5 billion bridge loan from JP Morgan to finance this. So they're really going out on a limb to make this deal, and they have to expect that they're going to get a significant return for it to make sense. If you have any questions on this acquisition or how this fits into Rocket's acquisition of Redfin, feel free to comment below, or you can always call, text, or email me. But thanks for tuning into this video, and I'll see you next time.